Morning, friends. Once again, welcome to the Multimillionaire Forum, April 2024 edition. We have very we have quite an interesting subject today. This is a subject which not a lot of people talk about. Not a lot of mutual funds talk about it per se. It's very funny, right? Mutual fund themselves don't talk about this subject so much. Although a lot of these fund houses, and there are almost about 43 odd mutual funds in the country, mutual fund companies in the country, and they themselves don't talk much about this thing because most of the time they're talking about the mainstream products only. Mainstream products like the large cap fund, the mid cap fund, the small cap fund, etc. So, that's what they typically talk about. Now, let's just put this whole thing in context, okay? So when we put this in context, we are just go forward. Okay, let's come back. Let's just put the disclaimer on for a second. Okay. So it's just there. This is just a requirement, compliance requirement. I almost sort of forget it, but yeah, this is purely educational and no product recommendations. And we will discuss other things about products and all of that in the Q&A, but not here. So this is what our typical mutual fund landscape looks like, right? In a very simplistic term. And of course, we are talking about equity mutual funds. We're not talking about debt mutual funds. So that entire section is not considered for our conversation today. We are only talking about equity mutual funds. So, hota kya hai equity mutual funds mein? You have the very conservative type of funds, which are basically the index funds, which we've shown in the green. And then what you have is the general funds, jahan pe 99% of investments are happening in these four large buckets. Flexi cap, large cap, mid cap, and small cap. Jisko hum log general mutual funds bolte hain. Okay, these are like, your generic medicines like your Crocin and Combiflin. Like everybody ko koi bhi thoda sa dard hua, bukhar aaya, so we just take a Crocin. It's something like that. Everybody invests in these four real sections. But there is something very, very powerful. There is something completely ignored by a large majority of investors. Okay, and which is sector funds. Now, what are these sector funds? It's a very simple thing. Sector funds is a fund which is specifically investing in a particular sector. There cannot be a simpler definition. For example, if it is a pharma fund, then it is just investing into pharmaceutical sectors. Pharmaceuticals ke large cap companies honge, mid cap companies honge, small cap companies honge. The fund manager decides which companies he wants to bring into that pharma fund. So that's a very simple example, and that is how a sector fund works. Now, sector funds, just in the same fashion, if there is an infrastructure fund, or if there is a fund for, let's say, housing, if there's a fund for commodities, the fund manager will obviously buy companies in that particular area, right? Kabhi-kabhi aisa hota hai that, sector funds are brought out very silently. So they don't make a lot of fanfare about it. But agar koi index fund leke aata hai, to, there is a lot of noise around it. Amongst the most recent examples is a fund that was brought out by SBI last month. So SBI launched a fund called the Energy Fund, right? And apparently they collected almost 7,000 crores in that fund. But this is the very first time I actually saw that a mutual fund not only brought out a sector fund, but also did some mega marketing around it. And they did so much of marketing around that they garnered actually 7,000 crores. Now, just to put it into perspective, today we have large cap funds and small cap funds, which have as much as 40,000 and 50,000 in terms of assets. Okay. Most sector funds, I would say, they stand at about 1,000, 2,000, maybe 4,000 crores. That's the size of this fund. SBI, in this particular fund, the energy fund, when they made a debut, they straight away came and collected 7,000 crores. Which goes to say that the fund houses themselves know that it's a powerful thing to do. And if this strategy is marketed well to investors at large, investors are obviously very happy and willing to invest into this sort of an area, right? So that is what the power of this sector strategy could be, right? So let's continue with the presentation. Let's just go back to the same thing. Yeah, let's just stand here. So this is just a broad selection of the sector funds that are available today. So in fact, if you see, most of the mutual funds have a fund in banking and technology. In fact, technology was as much as I remember the first time I saw technology funds, they were introduced in 1999. And if some of you remember that there was a technology boom that happened and crash subsequently that happened in the year 2000, and which was known very famously as the dot-com crash, right? So technology funds have been around for now 25 years as we speak. Banking funds have been around for a long time. Pharma funds, again, long time. FMCG, one of the oldest funds. This power, infra, PSU, auto, all these are pretty recent phenomena. Recently, a lot of ETFs were also launched around the bullion, which is gold and silver, and for those kind of things. Housing funds are a new entrant into this sort of a market. MNC funds have been around. So these are just different themes, different sectors. Then there are themes also. We're not talking about themes, but themes like, ethical fund, which is based on the Sharia principles. Or there are themes such as ESG, environment, social responsibility and governance. So there are so many of these sectors and themes playing around, but the focus on this is not as much as it should be. It deserves far more mind share and wallet share also, and some of our allocations also. So let's move on. Okay. So, okay, there are sector funds, right? Now we know there are sector funds. There has to be a logical reason why to do sector funds. Now, principally, sector funds are likely to deliver much larger returns, but not always. Now, I want to repeat this sentence. They are likely to do fabulous performance, likely to deliver fabulous performance, but not always. So, which means there are times when a particular sector is better than the other. We will talk about that, but let's look at some performance data. Okay, can you switch? And Zari is going to show us some performance data. Okay, very, very interesting. Okay, and you will see for yourself why it is so important to actually look at some of these sectors. Okay, and if you don't mind, let me just control the screen a little bit. Okay, so what you have in front of you, first I'm going to show you some indices. Okay, so by the way, the index that you know of. Okay, what index do we know of? We know about BSE Sensex. We know about Nifty 50. We know about Bank Nifty. But I've said this number of times in even our previous sessions that we have as many as 60, 70, and last count maybe 80 different indices, and newer indices keep getting launched from time to time.
4 new indices this month.
Okay, so this month itself, Zari says 4 new indices. I think manufacturing hai, infrastructure hai. Lord, you know why these things are happening? Kabhi us pe bhi session karenge. But the reason is that these are just very interesting methods and options, all to make investments on a DIY basis. So, but coming back to our subject, so these are some of the selection of indices. Okay, now we'll come to this green little window a little later. Let's sort of, okay, this is already filtered down, right? And now let's, for example, come to where is the index? Private bank, okay, Bank Nifty, Nifty. Okay, ये अपना BSE Sensex हो गया. Okay, everybody knows BSE Sensex. And the place where my cursor is, can everybody see that the return is 25.62%? Can you all see that? And this is 1 year price change. Okay, so this is what we are talking about, 25.62. Okay, so BSE Sensex did 25% in the last 365 days. So today we are on 6th of April 2024. So this data is a representation from 7th April 2023 to 6th April, which is today, 2024. Okay, so it's exactly 365 days in the past. Okay, so this is the return that the BSE Sensex gave. Okay, stay with this number. Let me take you to Nifty 50. It's right here. So Nifty has done maybe 4% better. The reason for that is when Nifty has a slightly more diversified and broad-based index. Sensex has 30 stocks and Nifty 50 has 50 stocks. So if you say, what has our market done in the last 1 year? The market has made a 30% return for us. Okay. And I can keep, now I'm going to do the inverse sorting. Ye jo sorting tha was from 0 onwards, the lowest performer to the highest performer. And now say, I'm just going to click this button. And here I have, in the last 365 days, Nifty Realty Index, which is real estate, has done 140%. Let me remind you, Nifty did 29%, let's say 30% for rounding off, versus that Realty has done 140%. Okay. CPSE, which is Public Sector Enterprises, has done 100% last 1 year. Okay. Infrastructure, BSE Infrastructure Index, this is Infrastructure Index, that has done 109%. Okay. Then let's say Power Index, BSE Power has done 95%. Okay. PSU Bank has done 95%. Can you see what's happening here? So what is happening here is that here, I mean, this green little box is simply showing you that last 1 year, it is just a different representation of the same thing, that yeah, Nifty Realty 130% and all of that. But हमें ये भी दिखाई देता है data that in terms of last 1 year, last quarter, who was the highest performer, last month, who was the highest performer. It just gives you a sense that if we are today in the Nifty oriented stocks or the large cap funds or the large and mid cap funds, our returns will be far more mediocre versus being invested into sector funds. Okay. So just think about it. Where 30% and where as much as 130%. So 30% has increased. If you had a 1 crore portfolio, your returns in the last 1 year have moved up from 1 crore to 1 crore and 30 lakhs. But if you were in a realty fund, even if you had 25% of your money, then that 25 lakhs out of your 1 crore would have doubled and become 50 lakhs. If you had invested 1 crore, it would have become 2 crores. Imagine a real estate fund. Your real estate fund comprises of what? Real estate companies, obviously. Now, you tell me which property has the potential to double in 1 year. I mean, there could be some lands and things like that. But broadly speaking, when we invest in real estate, commercial or residential, do we really see this kind of a growth happening? Not really. But this is what this index did for us, right? Which is why, it's a compelling thing for us to consider this thing. And if you noticed in your interactions with a lot of people outside, most people stick to funds. Most people talk in terms of Nippon small cap fund, or most people talk in terms of SBI small cap fund, because these are funds that have brought a lot of returns to investors through and through. Okay. But while they are not a bad idea, we completely are ignorant about these sector funds. And that's what we wanted to highlight today. Okay. So why is it then, that we don't invest in sector funds? Why is it that a lot of people don't consider it? Don't consider it. A lot of fund managers or financial advisors, they don't even talk about sector funds. Why is it that they do that? So we identified some 2-3 major reasons why this is happening. Okay. Now, one of the fundamental reasons that we found is that it is too risky, that everybody thinks it is too risky. But to my mind, I think it's a question of being volatile. Sector hai, it's a focused strategy. It's a concentrated portfolio. मतलब ये अगर एक ऐसा fund है which is investing all its money into technology or all its money into pharmaceuticals, then that's a big risk, because if something bad happens to the industry, my money can really erode rapidly. Now, nothing is far from the truth here. You see, what happens is, it may be more volatile in a time where something bad is announced on that industry, but that is not something that happens all the time. What happens in reality is that these sectors are cyclical sometimes in nature. These sectors are sometimes very situational in nature. Now, for example, let's say take the example of pharmaceuticals. Now, why would you have volatility in pharmaceuticals? Think about it logically. See, pharmaceuticals as an industry is something which is going to make generic medicines to very, very, specialized drugs and medicines. And of course, they do research as well. So a lot of us have need for pharmaceutical companies, right? Medicines and medical facilities, healthcare, hospitals, these are not things that will suddenly go out of business. They will not have a boom. They will not even have a bust. They will keep moving at a regular pace. What will happen is, in times like we saw in 2020, when there was a global fear in terms of health, when healthcare services were at its highest level and when we needed a lot of healthcare services, that's the time pharmaceutical funds actually made almost like 100% in 1 year. Okay, but otherwise, pharmaceutical fund has not been volatile. Okay, technology has not been volatile. I mean, FMCG has not been volatile. It has been constantly moving at a nice and good pace. मजा तो तब आता है कि when you know that you have to get into this fund at the right time, at the right juncture, and then suddenly it just sort of takes off, So then, comes the problem of concentration. A lot of people think that there's too much of concentration, it's too focused. But if you actually read some of the biggest investors and the way they have made money, a lot of times they took focused bets, they took focused calls. They said, okay, at this time, robotics is going to do good, or at this time, artificial intelligence is going to do well. And that's why then they went and invested a lot of money into that. They put right from startups to established companies, they invested a lot of money in that space. And as a result of it, they made some supernormal returns. So what happens is, if your portfolio is going to grow at a regular 14, 15, 18% by having this sector fund, and some of you for whom we do manage your mutual fund portfolios, you would have seen that these sector funds actually change the entire fabric of the returns. Suddenly, if the returns are going to be 18 or 20%, they look like 25 and 35% because of these introduction of sector funds, which we've recommended, and we've of course seen that they've delivered fantastic performance. Now, what happens because of all these things is, because samajh nahi aata zyada logon ko, and mostly banks, mostly relationship managers and things like that, they don't understand. So they feel, oh, sector funds, let's not talk about it, too risky. It's just like derivatives, too risky, move them out. Now, I'm not saying that there is no risk in that. There is risk there. But one has to do a little bit of research so that the risk can be mitigated and you can take advantage of that situation for yourself, right? So that's the real beauty of investing into these sector funds. Okay, let's sort of move forward and let's look at the fact that how is the sector fund actually identified, or how is a sector identified? Okay, कैसे पता चलेगा कि real estate? Now I am telling you that real estate, for example, did 80%, 140% last year, right? We saw that the infra index had done some 100% last year. So पता कैसे चलेगा कि ये हो रहा है, right? So now there are two ways to do it. Okay, one is the traditional way, and one is the shortcut way. Okay, and I'll explain both of it. So the traditional way is what? I mean, what happens is, सबसे पहले तो some global event happens. Okay, मतलब कोई बहुत बड़ी सी event होती है. आजकल the most popular global event is, of course, besides war and all, I'm talking about a slightly progressive sort of an event, is global warming. It's an issue, everybody knows about it. We have also spoken about it in various instances, pretty much in the last, so many sessions of MMF that we've done, right? So, global warming, big issue. So, उससे क्या होता है? I mean, we have to reduce the fossil fuel consumption. We have to reduce our dependency on petrol and diesel and shift towards renewable power. Correct? Coal-based power se leke, we need to go through solar and other renewable kind of energies sources that are available. We need to harness those and we need to use that power. ठीक है? So that's a global event. अब global event के बाद में उस पे बहुत सारा news आएगा. News के बाद में there's going to be a lot of data flow saying that this government is going to do this. This country is doing this. This government has made this new policy. In India, we have done so many things. We not only done things, we have even announced. And the way the world works is, you also go to these forums, which is the UNO and United Nations Forum and all of that, and the G20 Forum. Then you go there and you commit. That this is what we are going to do. Another forum is COP, climate. वाला जो forum है, which meets every 5 years. So The latest one is now COP26. So there they say that, India will become so much in renewable energy. हम ऐसे सब commitments देते हैं just to show our solidarity and concern to the world. So what happens is global events, फिर आता है news. Then there is data that we give and that we see happening. Activity starts happening. Government starts making policies. They start making announcements also to that. And not only announcements, they also start announcing incentives. Like we have a current incentive that if you were to invest in a solar vehicle, I'm sorry, I'm saying solar, in the electric vehicle, then you have some tax incentives also. So this is the government's way of also indirectly telling you that please start considering this area. This is an important area. This is what we must do right now. Correct? So all these things happen. Now, when all these things are happening, see how long this procedure is. Huh? And like I said, long procedure, and one is a shortcut. So we'll come to the shortcut in a bit. So yes, of global events, right? These are all the news. So we know that which sector is going to have. Let's continue the story on that electric vehicle. So let's continue the story in solar. So what we will then do is we will go to that sector. We will go into that industry. Then in that industry, one will identify which are the companies operating in this industry. Then you go into the balance sheets of those companies to see which ones are more profitable than the other. And then you look at their investors' presentation, the analyst presentation that they all publish from every quarter to quarter. And then they start doing the investments there. Very long procedure, very complicated procedure. Okay. But there is a shortcut, like I said. Okay. And let me give you a glimpse of this shortcut. Okay. Can you just open the trend line again, please? This is indices. Take me to the sector, which is the next tab, the tab next to it. Okay. Now you see, very interesting. Okay, see what is happening here is these are sectors. Now we live in such fantastic times that data is so beautifully and so easily available to us. So you want to know which sector did how. The answer is there in front of you. Now a very nice way of doing that is now this is a sector view, right? This tells you then the last, what you see on your screen is in the last week, which sector has performed. But we are not a trader or, we are a long-term investor. What we will do is we'll look at a quarter. First, let's look at a quarter. Okay. Now, in the quarter, what we are seeing here is that, for example, in the last 3 months, hotels and resorts have done very well. Can you see that? And can you, who are the hotels, restaurant, and tourism has done very well. Surprise, right? I mean, but these stocks are moving. These companies are actually making profits. What's below that? General industrials. Okay, so these are capital goods that have made money. Right next to it was metals at 12%, and above that was oil at 17%. Now we can see there is some action happening in this sector. Now listen to this very carefully, okay? We know there is action happening. What is this grid telling you? That transportation where there was buying happening in the last quarter. Okay. Now what we will do is let's take an example of transportation. Okay. Let's look at the last year. How much growth happened in transportation in the last year? Okay. Can you show that? Oh, last year was 117%, which means lot of smart people are buying a lot of things in transportation. Last quarter, when we saw that there was a 16% growth the last quarter, which means that एक साल से लोग खरीद रहे हैं. Last quarter, some of the smart investors are buying. Example, can you move your cursor away? Okay. If you see, for example, in a quarter, now I've just taken a snapshot of this. Go to the quarter again. And in the quarter, I'm seeing oil and gas, which I didn't see before. So if oil and gas has suddenly shown me a 17% buying interest or a return that has happened in the last quarter, then what I can understand from here is maybe down, this is the time of this sector. This sector is probably going to move forward. Okay. I'm just giving you, stay with me. Don't make any conclusions right now. This is a shortcut, but just a part of the story. There is still more things in the story. This is an indicator of sorts as to find out which sector is likely to move. Now, if you're a very short-term investor, you can look at the last 1 month or last week to see. I'm just speaking from academic interest because this is an educational platform and we basically serve, information requirement for everyone who joins here. So if you are a very short-term investor, trader, not really an investor, maybe you will look at weekly trend and monthly what's happening in which area, what's happening. You might even find these red boxes interesting, which is to say that in the last quarter, fertilizers went out of interest, but oil and gas became, areas of interest in that sense. So this is what we call a sector momentum, what is happening in a particular sector. But something which is even more reliable and which we like to see is to look at charts. Okay. Now, can you show TradingView tab 1, please? Yeah. Click on that. Now, what you see is in front of you now, again, this is, for example, of pharma. Okay. So this is pharma. Now, when we look at pharma here, can you come to this buy signal? Yeah, that one. Now, we can see that on April 1, 2020, this blue arrow is a buy signal. Okay, these are some indicators that we are using. Okay, and these are just very simplistic chart patterns that I'm showing. And this is on a very long-term time frame. Okay, so April 1, we got a signal that, this sector might actually do well. Okay, and we got a sell signal on this sector, and come to the sell signal in, where is the sell signal? October, no, one ahead, November 21. So for 1.5 years, which is about 18 months, there was a potential buy signal here. And actually what happened, if you realize, April 20, just come back and can you measure the returns that happened in this zone? Yeah. From there to there, it's about 113, 14%, right? Now that happened from a period of approximately April, May till about November of 21. And if you remember, this is the time when we came to a lot of you and recommended investment in pharma. Now, in the same fashion, there was another indicator which just came in June 23 that pharma is again going to, rally. And we are probably still in a buying mode in pharmaceuticals. Okay, let's just take some other examples just to show you an ideology of which sector might move up. You see, none of these shortcut methods that I'm showing you can be taken as gospel. So, because these indicators can fail. Okay, so none of them are gospel that, this is the way or this is the method. It's a combination of a lot of these 3-4 things, which tells us that now for the next 2 or 3 or 4 years, this sector might do exceptionally well. Okay, so metal again, metal has been in a, look at the blue arrow here. So it has been it has given us a buy signal somewhere around November 22. Then we will go and we will start searching that in the metal area, which are the funds that are investing in metals? Is there a metal fund, for example? And if there is, then we would like to consider it. Okay. In that same way, can you click on some others? Let's look at FMCG. Let's look at what's happening to FMCG. Oh, FMCG, as you can see, is already giving you a sell indicator. Okay, it's a signal. That doesn't mean that you should go and sell all your FMCG holdings and all your FMCG funds. But this is just an indicator of sorts. It just tells you that maybe it's going to be into a bearish zone. But remember, we are not bearish in the long term. Sorry, we are always bullish in the long term. So in the long term, we always make money. So there can always be a bad 2 or 3 or 4 months that might actually happen. And that is what this particular FMCG index is showing you. Okay, let's just look at 1 or 2 more examples. Auto has been in a bullish mode for a long time. Infrastructure also, there was a buy signal that came long ago. Okay, so, and can you bring me to a presentation? So the whole idea is that this is a shortcut method of us to identify कि कौन से sector में कहाँ पे क्या action हो रहा है. So can we look at some of these things? So one, like I said, it's a long story. So you go by the fundamental, by the book. Now, not everybody is capable to do that. And while we as a, as an investment company, we are looking at the fact that, okay, let's look at news also. Let's look at the long way also. So we understand what's happening. But let's also look at the short way. So a combination of these 2 things together, and that's how we bring out some interesting suggestions to you from time to time. Now, here is something that we found really interesting. These are not really recommendations, but way back in January, we found out that, in the year of 2024, some of these areas are looking really interesting. Now, realty has been doing exceptionally well. We already saw the whole of last year it's been doing well. Abhi bhi lag raha hai, it will probably, make money for us as investors. So maybe we should consider some allocation to realty, something to all these different sectors. And there could be more. But this is just a small little selection of where we think their opportunity exists today. And it's so funny. Again, to give you some feedback, if you look at a website called Value Research, and if you look at some of these small cap funds, mid cap funds, you see the size. They also publish how many assets they have. The assets could be 30, 40, 50,000 crores. And if you look at the asset size of these funds, it's 1,000, 2,000 crores. That doesn't mean they are bad, but the performance of these assets have been exceptionally good. We are only trying to make a compelling case to you, saying that there is a very strong reason that when you've interacted with us, a lot of times, we talk in terms of having approximately 30% money in large cap, about 20% in mid cap, 20% in small cap, and 30% across 2 or 3 sectors, that we'd like to invest and suggest investments. So that is how our asset allocation is distributed. That's always something that we've always moved the money into those areas we've always suggested movement into those areas for you all the time. So that's why we think that there's always a 30% money that should be in these sectors. And this is the only place where you need to be active. See, you don't need to be very active with large cap funds and mid cap funds. They can perform the way they do for the next 10, 15, 20 years. You've seen so many portfolios that we have. I show you sometimes my own portfolio. We invest for 10 years, 15 years, 20 years. We don't do anything with small, mid, large kind of funds. But it is these funds where we may want to be a little fast, we may want to be a little aggressive. And this is what actually adds a lot of alpha, as we call it in our language. And in very simplistic terms, it is this activity that causes the returns to jump, to leap ahead in terms of even via a mutual fund portfolio. You don't need any expertise. You can just invest in these sector funds and you will see the performance changing dramatically. So with that, what I want to do is I want to close